So, what's going on, guys? Today is another episode of my videos. Now, today I'm gonna be analyzing gold. So, here it goes. So, in front of me is the gold market. And taking a look at the daily chart, we are somewhat of an in-between between going up and going down. We don't know where we are heading or where we should be heading, where we wanna be heading. So this could turn into a choppy up and down for some time. Now if we add some indicators, let's take this one. Now we are here basically, which one is the 200 EMA? Let's take a look. So the blue one, well basically we are below all moving averages except the 20-day EMA, which means currently we are kind of seeing a bearish momentum. Now let's take a look at the RSI. Well, the RSI is in the middle and is forming kind of, I don't know what this pattern is called or if it has a name, but this often turns out to be or could turn out to be a kind of a bullish, well, I don't know, we could call it a V pattern or whatever. If you take a look at it from the other side, it could be considered a head and shoulders pattern on the RSI at least, which means we could here head to this trend line, this EMA, which would be the 200-day EMA. Now taking a look at the 4-hour chart, well, we are here trading within this triangle, obviously, and we are here trying to break the 200 EMA, but it seems like we are not gaining enough momentum at the moment. Let's add just quickly some order. Now the stochastic is above 50, which means we are at the upper parts, which means we could stay here, which would mean that we will head higher or at least stay at the 200 EMA. Now if we add the MACD, for example, as well, we are here seeing a cross which would lead or could lead higher, but it looks like this here could turn to the downside. So basically, since we are stuck here in this up and down pattern, where is it? So here, taking a look at the 1-hour chart, we are, well, here we are above the 200 EMA, but if we get rid of all those indicators and just quickly form some kind of simple support and resistance lines here, we are seeing this choppy up and down, which means the trade for the next shorter period would be something like this. I mean, the risk reward wouldn't be that great, depends where your exit is and where your entry is. If you adjust the stop loss a little bit or your entry, you could have a risk reward of 3 to 2, depends if you enter right now. If you wait a little bit, maybe until we reach 1790, or if your stop loss is below 1795, if you make it a little bit higher, it depends on your exit is. but you could here make it a risk reward of 2, and which is why this is the trade for the next hours to watch out for, because chances are that we might continue this up and down. Even though if you take here as a bullish flag here and get rid of the resistance, and now here I would definitely watch out for a bearish sign, so either a candlestick that shows to the downside and we go lower, or if this is considered to be a bullish flag, then this candlestick here is very bullish and could be considered the start of a breakout, where we might here be seeing a retest and suddenly go higher, which actually might happen here because the MACD is suddenly turning to the upside and the RSI is, well, at the upper halves, but not much to say or to see here either. Now, what I would watch out for, or the trade that I would take, which would be the simplest trade here for the next time to come, would definitely be here a short position. And if you are new to trading or not willing to risk that much, I would suggest you take it, or you make it a 2.0 risk reward ratio, which would be something like this. So this would be my trade for the next time to come. But I would still wait here for, maybe you can see a clearer bullish sign, bearish sign. Otherwise, if we skip down to the 30 minutes chart, well, the choppiness is still here, but as I said, I would here look out for a shorting position. Something like this. So this was my analysis of gold. Thanks for watching.